7:30. I don't know how many people are going to join this, but we're going to talk about China because there's been a lot of interesting news on the situation, the state of play with China for 2023. So, just off the bat, apologies. Straight off the bat, just want to stress that this is not financial advice. In this video, I'm not going to be telling you whether or not you should be investing in China. I'm not going to be asking you to pick any stocks or do anything like that. I'm simply just going to go through some of the information that is out there. I'm also going to give you my thoughts around China potentially leading the way this year when it comes to the global recovery. And that very much is the sentiment at the moment. So I'm going to take you through some sources. I'm going to give you some thoughts and maybe just talk a little bit about how you might be positioned in your investment portfolio. We'll probably talk a bit about diversification because this is very much tied into this whole investment journey. So I did post on, I think it was yesterday, actually. No, it was yesterday. I posted a reel on Instagram looking at this chart specifically. And this is a forecast from the IMF. And here we have a good list of countries. So Germany, Russia, Italy, France, the US, Canada, Japan, and China. We're at the top here. And in that reel, I kind of, pointed out the fact that we are the only economy that is forecast to actually shrink in 2023. So 2023 in this color right here, although we're going to rebound in 2024. Now, interestingly, we're the only one in 2023. Germany is going to grow marginally. Even Russia is going to grow marginally. And now Russia have been doing some very clever things with their moves that they've been trying to make with gold. They've definitely been trading more oil, and they've certainly struck up some other relationships in terms of trade with other countries around the world, which is adding to this forecast of them actually being in the positive growth arena despite all of the sanctions. But that's by the by. And I think it's really important just to state, I mean, Italy is going to grow. Italy is going to grow in 2023. But I think it is important to state that these are forecasts. So obviously they can change, they can be wrong. And the whole point of a forecast is that they will change during the course of the year. But as we sit right now, the UK is the only economy that is set to shrink this year. Now, interestingly, and this is why we're on this live stream, is to talk about China. And talk about China in the fact that they are mooted to lead the global recovery this year with GDP growth of over 5%. And this right here follows a conversation that I had with a friend of mine last week. So my friend Terry is an investment manager. He's also a financial advisor. And we were talking about the state of play and the markets and how, as an investment manager and financial advisor, what moves he's making in managing people's portfolios. And he started talking about China. And it was really, really interesting to see and hear his reasons for why they are restructuring, rebalancing a lot of their portfolios for clients into China as the main area where they're going to expect some growth through 2023. And there were a couple of reasons for this. They've had a really, really big struggle with COVID. There was a point probably 2 months ago, if not a little bit shorter than that, that they were saying that COVID numbers were going to reach over 1 billion in China alone. So we know that they've been, in lockdowns, and they've been quite draconian with their measures to control COVID. They seem to be coming out of that. And that is really what's been spurring on this confidence in the fact that they're back at it now. They're going to be back open. So therefore, this is going to spur the numbers over. And I think it's really important just to acknowledge when you start seeing headlines like this, because ultimately you've got to follow the money, right? I'm sharing the wrong one. Let me just share the right tab. Which one do I want? I want this one. Okay. So when you follow the money, you start to see articles like this. Foreign investors start 2023 with a record $21 billion push into China stocks. So big money is going here. institutional money is going here, and this is very much reflected in the conversation I had with Terry last week around the fact that as a company they are looking to reposition themselves into China, and this just goes on and on and on. So right here is the FTSE 50 in China. So this is essentially the 50 most liquid companies, most solid companies in China. Again, I need to share the right one with you. I want, which one am I on? I'm on this one right now. Share this one with you. So this is the FTSE China 50, the 50 most liquid companies in China. Now it's worthwhile having a look at this, right? So this is 31st of October 2022. Look at where they were. This is 9,268. They were in the chart. Look at this run up all the way here, up to 13,000. And yes, they've had a bit of a dip. The peak was on the 27th of January at 15,170. This is a huge run up. Now, obviously, they're at 13,000 at the moment, but this momentum right here is what investors are basically seeing. And when you start paying attention to some of the other articles that are out there as well, there is a quiet bullish attitude towards the Chinese market this year. Let me just pull this one up as well, which is an article from The Economist. Economist bullish over Chinese economic outlook in 2023 with growth forecasts of over 5%. I think the actual number that they quoted in here is actually 5.4% is what they are projecting for China in 2023. Now, I'll link all of these articles so you can actually go and read them yourselves and kind of make up your own mind on this. But I think it's really, really important. Beginning of the year, I did a forecast for the UK. I'm going to do another one on the housing market because I did a reel again this evening on house prices in the UK. So I'm going to do another forecast for housing. But I want to basically just have a look at the forecast for China because I think this is really, really important and will help us kind of get a gauge of how the land basically lies at this point in time for China. Again, I've got to make sure I'm sharing the right screen. So I now want this one with you. So this is the forecast for China at this point in time. So the main ones to pay attention to here will be the GDP annual growth rate. So they are projected to grow at 4.9%, although some of the articles are actually saying 5.4. But a little bit of leeway here and there, that's not a problem at all. Now, the most important thing that I think to look at when you're looking at forecasts for countries is, unemployment rate. Their unemployment rate is actually set to drop. In the UK, ours is set to increase, and I believe that that's going to be the same for the US as well. But actual at the moment, 5.5% unemployment rate, set to go down to 5.3%. Interestingly, their inflation. Now, if we could get anywhere near this inflation rate, we would deem this as a success story here in the UK. Their inflation number is set to increase slightly by the end of 2023 to 2.9%. But the inflation, the factors that they will deal with when it comes to inflation are very, very different to ours because obviously they're a manufacturing economy, really. The levers are very, very, and their bank rate is also set to be stable at 3.6 throughout this year. But this is the key thing. This is the forecast for them at this point in time for the year. In Q2, we're saying 5% here is what it's saying, down to 4.9% here. Now, is this going to be the engine for growth moving forward? The forecast at the moment suggests that it is. I think you have institutional money essentially saying that it is. And so what does that mean for you if you're an investor? Now, again, this is not financial advice. I'm not going to tell you to go pick stocks and all this kind of stuff, but I do want to talk about the general positioning of portfolios, okay? So on this channel, I've spoken extensively about the fact that it's very, very important to make sure that when you have an investment portfolio, that you have a diversified portfolio. And what that basically means is that you have a little bit of your money invested in the US. Yes, the US is the largest economy in the world. China is second. Then you might have money in the UK, Europe. You might have it smattered all over the place in terms of geographical regions, right? And what that basically means is that when the US is suffering, China might pick up a little bit of the slack. When China might be suffering, Germany, Europe might pick up a little bit of the slack as well. Really, really important investment management strategies and tactics within this, okay? The struggle that a lot of first-time investors come up with is they don't quite yet know how to build their portfolio in a diversified manner, particularly if they're doing it on their own, picking individual stocks. Now, if you're investing with someone like maybe Vanguard, for example, and you've picked up the global funds, the VWRL, for example, you will have exposure to countries like China. So effectively, you don't need to really do anything at all. But this is definitely something that maybe you should do a little bit more research, maybe a little bit of further reading on if you have a portfolio right now where you're wholly 100% exposed to the US and to the US only. So what I mean by that is if you've got the VUSA, for example, and you're all in on US stocks predominantly, you might want to do a little bit of further reading just to make sure you're positioned correctly. And you need to ask yourself whether you would want exposure to China, given that these are the forecasts. And again, the forecast could be wrong, but the institutional money is going towards China, as you can see in the article that I shared earlier, where $21 billion, and this is only at the beginning of the year. I would hazard a guess that these positions are being taken right now with the research that all of the investment houses tend to have access to. It's calculated. Okay. So if 21 billion quid of institutional money is going somewhere, you know that they're making that decision based off facts, based off real in-depth research. So it's worthwhile considering and taking into consideration for your own investment portfolio. Now, I might do another comparison video when we look at maybe the States and look at the forecast there. But I think ultimately, within my portfolios, it is already diversified, so I don't really need to do anything at all. I know that Kevin was in the comments basically saying he's had some Alibaba that he's been holding since 2021. How this is going to impact individual stocks in the Chinese stock market, it will impact it differently. Some sectors will do well, others won't do well. So whether Alibaba will be one of those that will do well off the back of it is hard to say without me really delving deeper into it. But I think as a general picture for China, at the moment, the forecast is positive. But again, this could change overnight. If they had another COVID outbreak, for example, and they went back into lockdowns, then this is clearly going to change. But the indication at the moment is that China is going to lead the global recovery this year and is going to be, I guess, the place where you're likely to get the best returns based on these forecasts at this point in time. So I would encourage you to do maybe a little bit of further research, further reading on your own to decide and review your portfolio. Maybe make sure that you've got some exposure in these places. And if you haven't, just revisit the reasons why you don't have exposure in those areas as well. I mean, to be honest, the S&P 500 that's actually come back. I've got money in the S&P 500, and I've seen that probably at its peak it was around about 10% down. I looked maybe 2 or 3 days ago, and it was like it's recovered quite a bit, and I think it's recovered by about 8% or so. I think I'm only about 1 or 2% down at this point in time. So your point of entry is obviously quite important for these kind of analogies and examples. So bear that in mind. But we do know that the US market is also going to do well, has done pretty well. Actually, let me have a look at the US forecast. Actually, let's have a look and see. Let's see if I can just share this with you right now. What is the US saying? Overall, what are we doing? What are we doing? Countries, forecast countries, the United States. All right, let me just share this with you. 1 second. So we can see what the US. So the US GDP annual growth rate is going to be about 1.3%. This is what is forecast at this point in time. So again, 1.3 versus 4.9, it's a big difference. So, reevaluate your investment portfolio is what I'm going to say here. Do some further research. If you don't have exposure to China, maybe you want to do some research to see whether or not you want to. But yeah, that's the thoughts. Kevin just asked, how's your 10K in S&P 500? Pete, is it in the income one or the accumulation one? It's in the accumulation one because I don't need the income right now, so it's just accumulating. But at the moment, it's in the minus. It's not in the positive right now. So long-term investing and all that, holding it for the long term, hopefully we'll see a good return out of it. But yeah, look, these are the lessons that we kind of learn as we go through the entire investment cycle, right? Markets will rise, markets will fall, some territories will do better than others. And that's the whole point of having a diversified portfolio, not putting all of your eggs in one basket. But anyway, hope you found this useful. It is Saturday. I'm going to go watch a movie and go chill out. I will catch you next week. I might do a Q&A tomorrow. Maybe, possibly. Just keep an eye out. Who knows? All right. Catch you later. Cheers. Bye. Hmm. You might be stuck with me because my mouse is just doing this weird thing again. How strange. All right, you may be stuck with me because my mouse isn't working. I can't click off to end the stream. Um, it is slightly annoying.